Should you buy Costco stock? Legendary investor Charlie Munger has shared that he's addicted to Costco. His friend Warren Buffett had a position in the company until the end of 2020, and it's been one of the best performing stocks of the last 30 years. Today, the company is worth $217 billion. So what makes Costco such a good business? For one, it takes care of its stakeholders. Employees are fairly compensated, and even though Costco is the third biggest retailer behind Walmart and Amazon, they provide superior experience through a commitment to affordable prices. A great example is the Costco hot dog. Despite rampant inflation, a Costco hot dog and soda cost the same as it did back in 1985, at just $1.50. Another example is Costco's rotisserie chickens, which sell for only $4.99. These products are known as loss leaders. They lose Costco money individually, but the low prices get customers in the door and also drive memberships. And Costco owns its own poultry farm in order to keep its prices low. Costco's financial performance has been remarkably consistent. The revenue has more than doubled from $113 billion back in 2014 to $234 billion over the last 12 months. Analysts are projecting growth of around 6 to 7% for the next 3 years, which is still impressive considering the size of the business. Memberships have proven to be incredibly good for Costco's business, not only attracting new customers, but also ensuring they continue to shop in their stores. But due to the nature of the business, their operating margin is fairly low at around 3%. This translates to around $8 billion in operating profit for the last 12 months and $6.1 billion in net income. Costco's enterprise value is $211 billion, which leads to multiples much higher than competitors. The enterprise value to EBITDA is 21.3 and the PE ratio is 35.9. So investors trust the quality of the business and are willing to pay a premium to own Costco shares. But the high premium does have a negative impact on future returns, especially if public sentiment towards Costco should change. For example, if you assume Costco continues to grow earnings at its historical average rate of 12% per year, that would mean net income in 10 years' time would be roughly $19 billion. A 25 times multiple on that figure gets us to a market cap of $473 billion in 10 years' time. That works out to an investment return of 9% per year over that period, including dividends. So this basic estimate shows that Costco shares are pretty fairly valued and there's not much margin of safety there. One of the questions that arise when it comes to Costco is what's next? The company is fairly established in the US and Canada and there isn't that much room to grow. If they can nail international markets, then Costco could have more growth ahead, but international expansion is always tricky and the stock doesn't leave much room for error. I believe it's best to buy the stock on the dip, which is why I give it a neutral rating. But these are my personal opinions, not financial advice, and I do own a small position in Costco stock.